All right, everybody, welcome back. Or actually, I should say welcome back. Thank you to a lot of the folks that are like, hey, we're not seeing your Saturday show. And, well, I actually went on vacation. And some folks were like, how come you didn't tell us? And I said, well, because I don't need to tell a burglar out there that it's free range to go burgle. So anyway, so we're back. And we got a really great show going on. We're going to talk a little bit about what's happening in today's market, the crazy mortgage rates. We're going to talk about home price appreciation that is still edging up slightly. Again, just like last year, no land speed records, but we're going to go through this. We're going to go through the metrics that we do every single week so you can get real-time information. Now, granted, we're going to go over some of the national news, and they're still talking about what's happening back in February or March and then part of April, and we're at the end of May. In fact, tomorrow, or I guess the day after tomorrow, is going to be, yes, June 1. Well, pretty crazy, all things considered. Let's get the show on the road. Let's have a little bit of fun. Okay, so let's open this up. We've got the annual home price appreciation staying positive, but just barely. And as we can see the big spike there in 2020, we can see that some of our trending has been heading in a downward direction on a national level. For us, on a local level, well, it's a little bit of a different story. Now, granted, we are not, making any land speed records, but we're definitely not sinking with the tidy bowl, man. So there's for the folks that only like to watch the first 10 minutes or the first 5 minutes, our market is actually doing quite well. We still see multiple offers with well-priced homes. Now, the takeaway is, and where some of the numbers are lagging, condos are really suffering right now. And we have a few clients that are sitting in that boat. And, it's a balance between looking at what buyers are interested in versus at what price point are they going to make a move as interest rates have headed up towards a 9-month high, even though they came down just a tad bit on Friday. Yes. Almost all of this happened with the beginning of the Iran conflict. We got some positive news on Friday. Mortgage rates came down a little bit, but just a little bit. We're not talking they did a drop at all. But when they get back down to the 6.25% to 6%, where they were pre-March, well, we're probably going to see those buyers come off of the sidelines. Well, not even probably. I guarantee you they will. But there's still a lot of buyer activity out there, and we'll get into that. So as we come over and we take a look at it, it says home price appreciation slowed further in March and through the first quarter of 2026. We just talked about that. Housing market is struggling to maintain momentum as affordability pressures and elevated mortgage rates continue to weigh on demand. 100% agree. So when we talk about the FHFA, the Federal Housing Authority there, reports that the U.S. house prices rose 1.7% year over year in the first quarter of 2026. Next paragraph. When we take a look at Seattle, they say that the Seattle area recorded the weakest annual performance at a negative 2.5%. Now, again, remember, these are March numbers, March, April. We're already at the end of May, and we're going to see a little transition, but they also include condos. We are only going to evaluate residential homes, excluding condos. Condos, that's a completely different video. If you want it, let us know. We'll fire it off to you. Make sure you take a look at the property updates. Go to our website. There's no marketing. There's no login. Property updates, you can see what's going on in your specific area. My team kicks out a lot of different area videos, and I hope you enjoy them because they're super valuable and they're chock full of information. Anyway, back to the show. When we take a look at the bottom, March was the 10th consecutive month, I said 9th, 10th consecutive month in which inflation outpaced price appreciation, again leading to the real home values declining in March, combined with mortgage rates that moved back and forth to the mid 6% range at the end of the month. Both reports suggest affordability pressures remain significant by constraints and by demand. Now, that's a given. But again, that was back then, and that's when we were starting to see a lot of the volatility with mortgage rates. Now, some of that has leveled out. We have headed up in a upward trend for quite a while. When we take a look at the trends with mortgage rates and whatnot, which again, 100% has affected what people are willing to do. So if we come back here, hang on a second here, let's hit the other headlines before we hit Freddie Mac. It says, listen, annual home price appreciation, we covered that one. Bottom left, builders breaking ground at fastest pace in the last 2 years. That is an important message. And when we get to the new construction side of things, that's going to be an important message as we're taking a look at overall year-over-year inventory, where we're at, both on resale construction, existing homes that come back on the market, and new construction, or just, nobody's ever lived in it construction, right? So keep that in mind as we roll over. And then let's see here, mortgage rates hit officially the 2-week lows, and that was just on Friday. And as you can see, we actually dropped into the mid 6.5s. Part of those will actually drop down into the 6.4 range. Now, when we take a look at Freddie, you can see there that since March, we've been heading up. We did peak out, then we came back down a little bit. We headed back up, and with news on what's going on, we started to level out and could very well crest back down. Now, all things considered, look at the highlighted section in the middle. We are still year over year, even though our rates are higher, even year over year though, to give perspective, we're 1/3% lower than we were at this time last year. So even though we've been heading in an upward trend since March, we're still lower than where we were at year over year. So keep that in mind, that our rates are still better today than where they were at a year ago. Just perspective. All right, here we go. Let's come back here. When we talk about days on market, we talk about the 7-day running average. The funny thing is we've got 7 days more on market today than where we were at this time last year. And that, again, is a much better number. We were at 15, 16 days back in March and April. We have brought that down, to 7 days, more than where we were at. 9 days from where we were at when we take it as a year to date. So we've actually reduced the days on market, and that's super important to keep in mind as we're rolling over. When we talk about the list to sales price, we've been running roughly about 2%, 1% lower than where we were at last year, and that is consistent here. They were selling at 99% list to sales price, and we're at 98% today. That's also the year to date and the same time over month. Now, when we take a look at what's been coming on our running 7-day average, look, we had our big Friday bump. 1,372 homes came on market. Our average has been about 1,000 at that. And down below, pended, we're still at 1,108. We've been averaging between 1,100 and 1,200 homes that were pended. So that means that for every home that's coming on market, we're pretty much taking one off market. The only time that deviates is on a Friday, which is a big list date. Heck, we even listed a couple of properties on Friday, so we added that to the mix. But understand, we've been consistent. And in fact, our pended homes has been rock solid, consistent over 1,000, since February. Almost since January, just that consistent straight across. And we are going to see that here momentarily because, as we say, support the channel. There's no advertising. Look, just help people get the information, like, subscribe, ring that bell so you know when we're doing this, and it'll help you keep a real-time value. So let's take a look at these numbers. Look at this. So if we look at the far right, that are year to date, our pended are up almost 5%. Almost 5%, a couple hundred homes, right? But we're only off on our sales by 84 homes. So all things considered, 3/4 of Washington State, that's pretty impressive, okay? Now, if we take the middle shaded green, you can see our inventory for this month is actually down 2.6 months. Okay, well, that's about 300-ish homes, 250-ish homes. And then when we take a look at our solds for the month, we're up 4.2%. Pended are up 15%. So here's the thing that you need to keep in mind. Our market is very unique. Yes, we have a lot of volatility with some of the tech industry. We do have some companies that are quote unquote leaving and whatnot. Our numbers will not show any of that fallout for at least a few months, probably about 6 months, before we start to see any real significant change. About 3 months, we will see a trend start to emerge because people don't say, oh, gotta go. Normally they don't do that. Tenants will, because they have a lot more flexibility. Homeowners, they have a little bit more stickiness, and we tend to see that in later months. The however is, our market, even price appreciation, is doing really well. So keep that in mind as we're rolling through. And when we take a look at the average sold price is up about $11,000 this week as far as the what we have done so far. For year to date, we're about $10,000 down. So the two basically balance out. Not a big deal. The important thing when we look at is we look for a continuous trend one direction. This just goes up and down. And if you look at prior weeks, you'll see it goes up and down, situation normal. When it goes down, that doesn't mean that your house lost value. It's just the average of what's sold. Okay, well, when it goes up, the average of what's sold went up. And a lot of times we can relate that to either a month end or mortgage rates or a kind of a bolus of new homes coming on market. And so we take a look at that. And this situation normal, we are doing exactly what we've done the last 2 years. In fact, it's a mirror image of what we've done the last 2 years. So keep that in mind. All right, as we come back, let's take a look at new construction. New construction, funny enough, has actually continued to improve. The center chart, when we take a look at that, look, we're 23 homes off from where what we sold last year, but we're up 96 homes as far as going pended. Year to date, we were at 16%. Now we're down to 12.8% as far as how much we have not sold year over year. And so that continues to improve, or what we say, those are lower numbers. Our pendants are improving. And all things considered, when we take a look at all of the new construction and the incentives, they're doing the same thing. Yes, they're starting to slow down. Well, they've been slowing down, but some of them actually have been increasing some of their release of product that is out there. And remember, with builders, there are hidden benefits that you need to make sure that you tap into, and you only do that by working with an agent that is familiar with working with new construction. Your site agent gets bonus by not offering you those things. Heads up, you could be leaving tens of thousands of dollars on the table if you are not working with somebody who can fully represent you and knows how to ask the right questions to get the right benefits for you. All right, moving on. So let's move back here. When we take a look at the average sold, they're down about $5,000 average sold this week. And the same thing for year to date. Not a big deal, and would fully expect that. Now, as we roll over, remember, especially now, ask the 5 questions. If you're looking at getting a mortgage, look, morning rates, afternoon rates, different lenders, different pricing, creative marketing. One of our recent clients, like, dude, man, this rate looks really good. And when you start taking a look at it more, there's a lot of built-in fees on the backside that draw that rate down, but you pay for it, because when you take a look at par pricing, most people follow the same guidelines. It's what profit margin they are willing to consider, what programs are being offered to that company at that time. You get that information. It's free. It's a video. It's free. There's no marketing. There's no login. Watch it. It will save you tens of thousands of dollars. Just saying. All right, moving on. Let's get back here. Bank-owned homes. Again, bank-owned homes, not very exciting. We still do not have very many. There's a number of folks out there saying, oh my gosh, we got lots of foreclosures out there. No, we don't. There's 3/4 of Washington state look, we're only up 32 homes year to date. We've had 95 more homes this year than we had last year. Again, 3/4 of Washington state. Sales and pending naturally follow that trend on an upward direction. And all things considered, we have super low inventory when it comes to foreclosures. Now, for those folks out there that are thinking that foreclosures in our area, that's a great deal. I gotta get on that. Or I call the books and tapes people. Pay attention. This is super important. We do not have enough foreclosures or enough inventory for banks to give the 15, 20, 25%, off, wholesale price or wholesale pricing like either other areas or like we did in 2008, 2009. It doesn't exist. They're doing paint, carpet, and vinyl. They are getting homes back on the market. They are getting market value for them. So if you're coming in thinking, hey, I am going to get a screaming deal, I'm going to buy myself a foreclosure, you are mistaken. You need to go someplace else. It is not here. I'm just telling you. And if you're working with some of the credit unions out there, if you are a borrower and you are struggling, you are in the good hands. Okay, credit unions absolutely take care of you. Keep that in mind. They actually care. Make sure that you're just honest with them. That is probably the most important thing. And if you guys work on a workout plan, stick to your workout plan or communicate, and you get a lot of grace with those guys. Anyway, there are opportunities that the feds kind of offer. Most of that has gone by the wayside, but there are still some options out there for you. In the meantime, hope you guys have an absolutely stunning day out there, and I'll see you on the next video. Remember to smash that subscribe button and have yourself a beautiful day. Take care.